There we are. I think we're actually live. Sorry about that little technical glitch there. I had to literally restart the computer. It froze up as I click start the stream. Now, I wanted to actually walk you through the 7 reasons why we should sell absolutely everything. That's a little bit of an exaggeration. But the first thing we need to look at is what the jobs data has just done. That's literally just come in. So let me pull that up for you because that really, really, really matters. Life works, brilliant. Okay, thanks for hanging in there. So we just got in this here, and I'm gonna take a screenshot of this so we can actually chew this through before we look at all the doom and gloom that's out there in this world, and then how we can actually make money out of this, which is always my intention for you and me. So we've got challenger job cuts. Yeah. 72,000 job cuts. It's a little lower than thought, which is, I don't think it really is a needle mover. Jobless claims came in at 225,000, slightly higher than expected, but not that much higher that it should cause panic on Wall Street. No one's jumping out of windows quite yet. And the continuing jobless claims are basically stuck exactly where they were in the previous week. So I don't think this really matters either. So this is kind of sweet. This sort of keeps the soft landing miracle alive, which is really all we want. We get services PMI, which is important, in about an hour and a half or so. An hour? Yeah. And you want to make sure that stays above 50 or 51, because below 50, it's recession territory, and we don't want that word to be used today, do we? So this is kind of perfect. A shirt unbuttoned, hair a mess, late night. Exactly. I know. Look at the state of me today. No, it's hot, and I have the windows open. I didn't feel like putting the aircon on, so therefore that. But yes, I appreciate you suggesting that my hair is a mess. That was my intention. So there are a couple of reasons why stuff isn't quite as glorious as it looks. And let's have a look at the pre-market here first. This was yesterday. Tesla down 3.5%. And this is today. And today looks still pretty red across the board, except Nvidia is bouncing quite nicely up 2%. But everything else is just moderately red. Brian, you did your onboarding call yesterday with Brett. Can't wait to have financial freedom. Brilliant, my friend. And all I'd say to you is, if you ever get stuck or frustrated or something doesn't make sense, like just chat. Raise your hands. Brett's amazing. He'll look after you really, really well. You should try to get Carp's hair. That man is half Jewish, half black, which is pretty extraordinary as a mix in terms of, afros. So I don't think I can quite compete with the extraordinary hair of Alex Karp. Anyway, getting back to doom and gloom before we look at how we make money out of this. The amount of margin used by funds out there is pretty high. So we're looking at this level here. And if you take that back in time, the last time we were at such levels was in July 2023, and then something terrible seems to have happened. So using margin is a dangerous thing for everybody, and it is very much the same thing for the big funds. So we're at those crazy levels again. And what does that mean? Well, have a look at what happened in July 2023. This was July 2023, and after that, the market dropped, about 60 points on this S&P, about 15% down since then, since that high, and that was partially because people were really overexposed. So when things go south, they really, really, really go south. I look like Matthew McConaughey. I think that's a little kinder, Rob, than the messy hair remark. So you're not my favorite. So let me give you reason number 2 why you should run out and sell absolutely everything. I don't mean that seriously, but no, there are some bearish things in here. Institutions and retail. How long are they? How invested are they in the market? So this is the 0 mark, right? We're up here, 240 billion, which means we're really, 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 really long. Like we're more exposed than at the peak of the 2021 market or 2020 or 2018 or 2015. So A lot of money is in the market, which also means there's a potential for a very significant pullback here, right? This lovely October. And here is reason number 3 to feel gloomy and depressed this morning and just, shout and scream at people. The biggest buyer in town is who? It's buybacks. Companies themselves are the biggest buyers of stock. And I know that sounds weird, but they take a lot of their profits and they feed those profits back into the market by buying their own stocks. If you buy your own stock, what do? You drive the stock price up because you basically reduce the supply of stocks. Right? There's just less shares about. And we're here. We're there. That's us. And it's going to keep going down for about another till basically mid-November, 15th of November. And then it's going to shoot back up to the moon and we're going to get a nice little November rally. But until mid-November, don't expect much support from these companies as blackout windows go in. Here is reason number, is this 4? Fourth reason to be doomy and gloomy today? Computers are basically selling no matter what happens. So the 0 line is here. So if the market goes up, they sell. If the market goes sideways, they sell. But the real danger is if the market goes down significantly, say somebody starts a war in the Middle East and oil prices jump up or something like that, then that is the outcome. And that outcome would be minus $40 billion being sold by computers. I've got cat fur up my nose now, which is why I'm itching. So not brilliant, right? Downside risk is definitely there. But there is always a silver lining, isn't there? Lululemon, there is always a silver lining or some spandex to buy somewhere. And we're actually not here. That's October 27th. What's the date today? Anybody know? It's October the 3rd. So we're here. We're here. And what happens is that after October 25th, that one there, 25th of October, the market historically has its Christmas, its Santa rally. And I think we're going to get one. Okay, those idiots at the ports might try to do their utmost to stop it, but other than that, I think we're very, very likely to get one. Lululemon, I'm glad you're paying attention. So there is also more good news. OpenAI just raised $6.6 billion in new funding. Why is that good news? Because Sam Altman will now be worth about $10 billion. And surely we all cheer for Sam, the charitable Altman, don't we? I can't spell Altman, can I? No, I really can't. Anyway. No, it is good news because it means there's lots of money about, and there's lots of money that believes AI is going to make us a lot of money. And I'm one of those people. I believe AI is going to make us a lot of money. And the people who were leading that was Microsoft and NVIDIA. They were investing in that. So that's quite good. That's quite bullish. So we like that. We think the party is going to keep going. And then it's just a sea of black and misery. No, in all seriousness, let's look at a couple of stocks here before the market opens. Will they IPO? I suspect so. Yeah, I suspect they will. Kiwi, I don't know why they ads on these live streams. I've turned them off. I've told off YouTube many a times. And they're sort of saying, oh, we're looking into it. We don't really know why. I suspect it's something to do with certain countries where they have policies to just smash stuff ads in anyway, even if I don't do it. So yeah, weird. I can't really do anything about that for some reason. So let's have a look at some of our stocks here. Okay, the S&P is essentially going sideways, but it's also not doing anything terrible here, right? I like these simplified charts in Trade Vision, which I'd encourage you to check out. There's a link down below. Why? A, because I think our indicator is amazing, which called us a buy here at $559. And we managed to squeeze 34% out of the S&P since the beginning of 2022. buy and hold would have gotten you 19%. That's pretty hard to beat the index. So I think we're still doing okay. I think we're still doing all right. I don't think there's any like big panic yet. I think Israel's response will actually matter this time. If they keep doing what they're doing and sort of take out people here, there, and everywhere, I think it'll be fine. If they take out Iranian oil installations, then we have a problem, because Iran threatens to then do the same to Kuwait and I think part of other parts of the Middle East. And just look at a chart of what happened in the 1991 Gulf War, right? That wasn't pretty. So we are hoping that they'll do something more targeted. Last time, I think what they did is they took out the air defenses around the nuclear sites in Iran, just sort of to show them we can, but they didn't actually take out the sites. So we're hoping for a moderate response there. Now, we can have a look at some of our favorites here. Tesla, for example, which is down pre-market, another 1.6%, trading at 249 right now. And 249 or 245? Let's have a look. 245. Okay. So we actually have the live. Oh, that's cool. Okay, we got pre-market data in here now live. Okay, thanks ITs. I asked the guys if they could do that yesterday, and they did. So Tesla, since the beginning of 2021 here, that one is down 44%. I know. Our little indicator, by just running these little green trades up, is up 81%. So we beat buy and hold by 120%. So people who say buy and hold is the only way to make money, no, it's not. It really isn't. 244? Yeah, something like that. 240, 244 in a bit. So is that the end of the world? No, I don't think it is. I don't think it is. I think it's, of course, we'd like it to go up, but I think it's just a little bit of panic there yesterday. We're above this high here at 243. If we look at where support sits, let me just pull that up. So if you click on advanced chart here in the top right, you go into the wild land of all this data. And you don't have to do that, but you can turn the trend indicator on here this way. And one of the cool things you can see is for every week up here, you can then see the actual market positions. So you can see here, say at that red line there at 240, there's 16,000 put options there. They will react as a support level. So 240 is pretty good support. In fact, 240 to 250, the whole thing is kind of a bit of a support zone here. So that's quite useful, right? You break through 240, okay. Then we start to panic. Then we head for these highs here at 234. But at the moment, it looks all right. And yesterday's candle was a thing of beauty because we went very low during the day. And then we rallied all the way back up to 247. So that was actually a pretty good day. Drew says VIX is doing quite nicely. I actually think I got knocked out of that trade because I set up a stop loss at 80. I don't know. Am I out of that trade? Okay, I need to open up the broker. Shouldn't be, because I think I set it at 18, so we should still be in it. So yeah, volatility is there. Volatility is spiking up with what's happening in the Middle East. It's not exactly surprising. Lee, in the UK for options, interactive brokers is basically what you want to use, or Tasty. Tasty would also work. Oil is up, VIX is up. Yeah, there's a bit of fear up there. Winston, ask Felix, does it signify anything when the 50 and 200-day moving averages cross over? Yes, it does. So let me give you an example of, say, I think maybe PayPal. I think we had that recently. So here in Trade Vision, if I just get rid of, well, if I put on the 50-day moving average, the yellow line there, and the 200-day, and say, let me give you see if I can find a good example. Can we find a good example? Yeah, here, okay. So you see at that point here, the yellow line, which is the 50-day line, crossed the 200-day. So let me make that a bit clearer. That is the 50-day moving average. Okay. Average. And then the brownish sort of line there, I don't really know if I can match that color. I doubt it. But that one there is the, okay, you can't see that. This one here is the 200-day moving average. Right? That line there, that's the 200-day. So when they cross, as they did here, some people say it's the death cross or something, which is a bit dramatic. But yeah, it signals that we are over the uptrend, we've consolidated, and now we're decidedly going down, and down we went, right? We went down very, very significantly after that. So it really tanked the stock. So yes, it is definitely significant. The other way around, you would also expect a turnaround. So for sure, it matters quite a lot to watch out for those little indicator signals. It's one of the many things that our trend indicator here in the background tracks, of course, because, that matters. So where did you get your microphone? Amazon. It's brilliant, I think. I mean, it's made by Rode. It's called Wireless Go 2. I bought a lot of microphones. This thing's amazing. Amazing. I think for outside, particularly if you're on the move and stuff, super, super amazing. So yeah, highly recommend that. Ultra VIX, I think that's, is that leveraged VIX? I think it probably is. Is Tasty easier to use than IBKR? Yes. Yeah, IBKR is a bit of a challenge. Tasty is easier to use for sure. TC, you're very kind. Winston is indeed very, very adorable. I was cuddling him just before this. But actually, we did a live trading challenge before this. Before that, I was cuddling him. Okay, let me see any questions have we missed here? Any thoughts? Have you heard of a company called Buckley Systems Limited? Nope, I haven't, my friend. Kiwi. Carlos says UVXI is a leveraged 3x. Yeah, generally when there's a U in front of an ETF like that, it means there's some leverage built in. 1 time, 2 times, 3 times, whatever. Well, 2, 3, 4, 5 times. So thanks for that, looking that up, Carlos. Appreciate that. So if you look at the pre-market here, where she is, as it's loading, I think the reaction isn't bad. It's not wonderful, but it isn't bad. If you look at the futures, the economic data today is pretty decent. Oil is up, but it's only up 2%. So it's not the end of the world. Volatility is up, which is fear, 3%. Dollar is up a little bit, tends to happen when the world gets a little bit scared. People buy dollar assets, but it's not doom and gloom overall. Let's have a look at Doomberg and see what they say. Israel hits Beirut as world awaits response against Iran. So we're hoping that it'll be more like those kind of hits rather than something major on the Iranian oil installations. That could be serious. So we're kind of hoping that won't happen. Mortgage rates near 6%, enough to start a refinancing wave. That's going to be good for the whole mortgage sector. It's going to be good for SoFi. It's going to be good for the whole sector. US jobless claims remain subdued, consistent with low layoffs. That's kind of what we want, the sweet spot, really, of soft landing. Yeah, that's sort of really the update here. So I think we're kind of getting away quite lightly. I think thanks to the jobs data here. The big thing tomorrow will be jobs data. And that might sound weird, but the unemployment rate and the non-farm payroll date tomorrow out at 8:30 is really what moves the market. So definitely watch out for that one. And then we go into next week, where I think next week's a bit quieter, isn't it? Oh, FOMC minutes on Wednesday. Yeah, that would be nice. And then inflation on Thursday. So it'll keep interesting. It'll stay interesting. Paul is saying, can you look at UWMC as a mortgage play? There are some good mortgage stocks out there. I'm not super familiar with them all, but there is definitely potential in that sector. Chart-wise, this screams anything but potential. Something terrible happened there yesterday. I don't know why. Was that an insider selling yesterday? No, that was before. No idea why, but you want to find out why that happened. At the moment, it doesn't look like something I'd want to buy at those levels. PayPal, well, we could definitely look at PayPal. So we had a glance at it in here in Trade Vision. PayPal. So again, if you'd held PayPal these last 2 years or so, since the beginning of 2022, you'd be down a miserable 64%. If you traded it like we did from the very beginning, our indicator would have given you 0% return, which is a heck of a lot better than 64% down, right? So we'd beaten up by 65%. Still not massively wonderful, but a heck of a lot better than that kick in the groin. And you know, when a stock does this for that long, like more than a year and a half, that's one of the longest consolidations I've seen in a while. When that breaks out, in my humble opinion, it will, the breakout's going to be massive, massive. What was that? Fish Named Wanda? Anybody remember that film? Was that 80s, 90s? That was a good film. So we have, in my opinion, broken out already here. We've taken out the recent high there. There's a bit of this going on there. But the beautiful thing with a long hold like that, a long sideways action, is that people got frustrated and they dumped the stock. So most people who don't want to be in this are already out. So I wouldn't expect a lot of selling as we go up. So therefore, I'm feeling quite happy and bullish about PayPal. So we got a PayPal trade open and we will ride that until our chart tells us otherwise. Are we buying more PayPal leaps? I'm not at the moment. IV is relatively high, so they're a little bit expensive right now. I'll tell you what I'll wait for. I'll wait for this. So if we do this and we bounce up again, then I'm interested. That's basically it, because we wanted to stay along that trend. And if we go down further, I'll probably exit at least half the trade here. If we then break below that 50-day moving average line, I'm out, okay? And that way I've retained my profits because we got in somewhere down here. So I will have retained profits even if it's tanking. And it'll then probably go down much lower. And it might go down all the way back here. It'll recover. And then, you know what? We'll enter again when it does that. And it just means we don't hold bag holders. We don't have bag holders. Bag holders are a horrible waste of capital, because imagine you bought here and then you held all this time for a year and a half. You got no return on your money, when you could have been in so many other beautiful trades that would have made you a lot of money. Could have just been in the S&P, right? And you'd be up, if you traded at 30% plus. So there is an opportunity cost to holding bags. So I try not to. Sahara says, can everybody please hit the like button? That's very kind of you. 209 people have hit the like button. 1,200 have decided against it, or 1,000 at least have decided against it, which is a rather harsh reality of democracy, that apparently this video sucks. I'm waiting for Palantir to pull back. Yeah, I'm kind of looking at that similarly, my friend. Palantir is... hang on, can I pull it up here? It's just flying and flying and flying, and they're just announcing partnership after partnership after partnership, so the bloody stock doesn't come back down. It is in a consolidation mode here at the moment, near the top of the range again this morning, which is nice to see. So I would like for this to give me another entry opportunity and do this and then bounce off again and go to the moon. But if it goes straight up, I'll also be quite happy. So. Thanks for all the likes there. We got an extra 80 likes, which is means at least 80 of you were awake. Blooming free roller, says George. Absolutely. Ding, ding, ding. The market's open. Do you do any long-term holds? Yes, lots. Most of my money is in long-term holds. So every single week, every Monday, I buy stocks. And that's stuff like Microsoft and Philip Morris and yes, maybe PayPal. A lot of just high quality stocks with good gross margins. And I've got some videos on that if you want to look that up, like sort of portfolio go throughs and stuff. We have an educational playlist. If you want to check those out, you can check that. So should we look at the live market, or should we just not bother? I think we should probably just not bother, right? Okay, let's have a look at the big boys. NVIDIA here and is up 1.7%. Yay, although tanking a little bit here, but that's obviously nice to see at 120. I think 120 was the resistance, wasn't it? Let's look this up in Trade Vision. NVDA. Brandon, thank you very much for showing love. Appreciate that. The resistance is, it's actually 130 really, that green line there, but it sort of starts at kind of 120 and then it gets bigger as we go up. So 120 is definitely one to break. It's also, yeah, we want to break out of this downtrend here, right? That each high is lower than the previous one. That's what we want to turn around. And okay, what's next? Tesla is, look at that. Look at that. Look at that little rally there, which is rather nice. So the rebound is incoming, which is brilliant. So we are almost flat here this morning, trading at 247 on Tesla. Let's just look at the resistance on Tesla as well. And 247, that's pretty sweet. It's kind of where we opened yesterday. So I think we can live with that. Are you playing so far into earnings? I just have trades open, longish term trades open into it. I'm happy in that instance to hold through earnings, even if they're a bit dodgy. So yeah, Tesla looks good. Anything else? PLTR, the whole war thing is generally a good thing for PLTR. That looks pretty good. Very, very top of that trading range there. We want to break out of that. We want to go into the 38. Resistance has just moved up to 40. That was at 38 last week. That's bullish. Very bullish. People are moving their trades up to 40. That's definitely good to see. Amy, you're fed up with MMM. You got out of the bottom. And that's unfortunately, Amy, exactly what most people do. And then they get out just before it takes off, right? And I'm working on something to make sure that doesn't happen to you guys anymore. So something, a little announcement they're coming in a few weeks. Missile manufacturers. Yeah, the whole war stock thing will probably do quite well. Let's look at some of the other big guys out there, say Microsoft. Still on a downward trend, breaking below the 50-day here, so not looking particularly wonderful, Microsoft. SPY and IDMF gap down. Meta, you're going to have a look at Meta. I think one of the dark horses in the whole AI thing is Meta. People are just not paying attention. I think it's an amazing business. Amazing business. Looking good. Trading here at the top of its sort of consolidation range there. So we're hoping for a little bit of a bounce and then a bounce up so we can get in again a bit cheaper. But at the moment, it seems to be in one of these sideways patterns, which we generally try to avoid. So yeah, there we are. Let's have another look at the headlines here for a moment. Israel, of course, is the story to watch. We'll hope they're going to bide their time and do something smallish and take out some individuals rather than take out the whole infrastructure in Iran, because that would really kick off something we don't really want. Color Life Laugh. I love that. Thanks very much for that. If you want to get your hands on our Trade Vision app here and our indicator, which has been pretty sweet so far this year, say on Tesla, we're outperforming massively by like 120%. Then check it out at tradevision.io. There's a link down below. There's a free week's trial. Basically, yes, we ask you to put your credit card in so we don't get spam signups. But if you don't like it, just exit it on day 6 and just click cancel. There's a cancel button in the account, And then that way we'll never actually charge you. But if you love it, if you like it like we do, like I do, then stick around, and it's very inexpensive. It's like $19 or something. And look at Apple, for example, 23% returns since 2022. We've done 49% with that little lovely indicator there. But you do still need risk management. Otherwise, you never make money. So there we are. I love you for watching. I love you for tuning in. Keep learning. And I hope to see you tomorrow. Another day, another opportunity.